To the Point with Michael Williams.
Good morning. My guest today, Greg McBride, Senior Vice President and Chief Financial Analyst for Bankrate, or bankrate.com, as all of us have come to know you. And there's plenty to talk about, and a lot of it, at least initially, centers around the latest. Hurricane Idalia struck another blow to Florida. Another hurricane blow to Florida, I should say. And as all of us watch that happen, and our hearts and help go out to our friends and neighbors in the northern and northwestern parts of the state, Mr. McBride, we also can't help but say, what's it going to mean for my insurance? For people who already say it's hard enough, if not impossible, to afford insurance and to afford getting into a home. Give us the overview.
Yeah, I mean, this has been a real budget buster for households. I mean, how many households in the viewing area have seen their insurance double or triple just in the last 2 or 3 years? You know, every time we get one of these big storms, it kind of adds to that risk of will we see higher premiums next year? And so, we're coming into the busy part of hurricane season now, September, October, and so I think that's a nervousness that a lot of homeowners share. Is what does that mean for insurance premiums going forward?
What's it threaten for the wider economy? I mean, do you see slowdowns in the offing here because of the complaints about the unavailability of or the unaffordability of insurance?
It's increasingly becoming an issue, and I think what we're seeing now is that in a lot of ways insurance is becoming to our real estate market what property taxes are to the real estate market in a lot of places up north.
Slowing it down?
Well, just where it's extremely burdensome. It's a big part of the equation in terms of the monthly payment that it takes, and so it's now very much a factor in terms of the affordability question. It's not just a matter of what's the mortgage rate and what does that mean in terms of principal and interest. Can you afford the insurance? Can you get insurance? Increasingly part of the calculus that people are evaluating in the home ownership process.
And could reshape what we're seeing in this market. I mean, right now, you and I have talked a lot, there's still a lot of cash buyers, still a very robust market at the moment, right? For all of the headaches. But you continue this tsunami of insurance rates, there's no guarantee that lasts forever.
Yeah, I mean, we have sunny days and plenty of golf courses, and so the demand is still very high.
And a lot of cash buyers still.
And a lot of cash buyers. We kind of over-index on the cash buyers here in South Florida. And so at a time when the supply of homes available for sale still very low. So that's keeping prices at elevated levels. It's, we're building in this area because we have more people coming in, but insurance very much a kitchen table topic, and from a homeowner and would-be homeowner's perspective.
For a little more perspective on that, the Chief Financial Officer of the state, Jimmy Petronas, talked to me from the EOC in Tallahassee the other day, saying we hope rates don't go up. Here in parts what he had to say.
Thank goodness the exposure to the state was not as impactful as storms previous to it.
Will we see rates go, though, higher because of it?
I'm not expecting it. I can't promise you that, but what I do know is I've got carriers that are wanting to come into the Florida market.
So that was he offered some caveats, and then he talked about flooding in the Tampa Bay area, that whole region of the Tampa Bay, Sarasota County, Hillsborough, Pinellas County, and the like. Said, we don't know what will happen with reinsurance. He said, so to your point, we've got to be careful. Let's listen to that piece.
They didn't have the wind damage, but they had storm surge. Those will trigger reinsurance policies to kick in. Those type of costs, unfortunately, could be felt by the Florida policyholder in the future. But it'll be a wait and see.
And you essentially are saying the same thing. We've got to wait and see what the ultimate impact of this is down the road. But ignoring the crisis is not something we can continue to do in this state, and that's the big we. And you talk about that a lot, even though we're not insulated completely just because we have a lot of wealthy buyers down here.
Yeah, and I've talked to people in the insurance business that are equally hopeful that we will see more reinsurance, that we might see more carriers come in, and that can certainly help from an availability and affordability standpoint on insurance. But again, I think a lot of that contingent on what do we see for the rest of hurricane season.
Around kitchen tables everywhere, people talk about inflation. Everything's costing more. What about interest rates? They're hammering me. I can't get into a home now. The interest rates are too high. Inflation's hammering me. Give us the picture there, where we are, where you think we might be in 3 to 6, 9 months.
inflation has really stretched household budgets. Nobody's feeling it more than lower and moderate income households. We've seen some pretty unfavorable trends, Michael, in the sense that savings that had been built up in the early stages of the pandemic has come down. Credit card debt that had been paid down in the early stages of the pandemic has now been going up. So credit card balances are going up. More people are carrying balances. They're carrying larger balances, and at a time when credit card rates are at a record high. People aren't financing purchases at 20% because everything's hunky-dory. That is a sign of the financial strain that a lot of households are feeling and continuing to feel.
Are interest rates going to continue to climb? Have we got hope that the inflation monster is about to be tamed? What do you see in terms of interest rates vis-a-vis the fight against inflation coming up?
We're getting close to the top on interest rates, but they're not going to come down in a material way anytime soon. And I talked about that 20% credit card debt. That's the thing. That credit card debt, that rate is not going to come down anytime soon. So you've got to have a game plan for paying it down, paying it off, because you can't expect interest rates are going to fall. And on the housing side,
and certainly not fall to the ultra lows that we'd seen a couple of years ago.
No, I mean,
those days are over.
We're in an environment where the economy is still growing fast. Inflation is still elevated. So you asked about inflation. You know, inflation at the core level is still well over 4%. The goal is 2%. So still a long way to go there. And we don't see, for example, mortgage rates. Yeah, mortgage rates aren't going to move significantly lower until inflation moves significantly lower than it is right now.
And for the person who says, I can't be a cash buyer, am I closed out of the market, Mr. McBride, with these kind of interest rates? What do you say to those folks? It's a tough situation.
It's not a great time to be a buyer. It is very difficult, and especially for that first-time buyer. But, you know, I think this is one where you're giving yourself some time. Your income might catch up to where things are. You also buy some time, mortgage rates could settle in. So, you know, maybe the answer isn't 2023, maybe it's 12 or 18 months down the road, you find yourself in a more tenable position.
We headed for recession next year? A lot of economists are debating that.
I'm a little bit more optimistic than I was, say, 3-4 months ago, but I still don't think the base case is avoiding a recession. We do a quarterly poll of economists at Bankrate. 59% said they expect a recession in the next 12 months. That's down from 65 or 70%, so it's improved, but as you can see, the base forecast that most economists still have is for a recession.
Deep recession or more shallow one, and what does it mean to me at home?
More shallow, but you know, again, I think that's kind of a hollow victory, right? Yeah. Recessions aren't fun for anybody. No. So the corollary I see is more to the dot-com bust, 2001, 2002, when the consumer was really what carried the economy through that recession. That was predominantly a business recession. You know, a lot of times when you say
that's what we may be seeing again?
That's the strongest corollary I see. Okay. But when you say recession, for a lot of people, the muscle memory kicks in and they think, oh no, 2008, or
it's not going to be that.
It's not going to be that. It is not going to be that. So I think what's the closer corollary is maybe the dot-com bust, which was more of a business recession than a consumer recession. It was very shallow on the consumer side.
Against all these backdrops, let's give advice to people sitting around that kitchen table or that coffee table saying, what's your best advice for me right now? Generally speaking, what are maybe the big three that you'd offer to people?
Yeah, 3 steps: pay down credit card debt, boost your emergency
Pay your biggest
savings.
Interest credit card debt first.
Yes, absolutely. But I think some of these you can work on at the same time.
Sure.
It's not a matter of get this done, then do that. Pay down the credit card debt, boost your emergency savings. You're earning more than you have in 15 years on your savings. That's not dead money. So not only
your cash can make you money now. You can get a good rate.
5% or better, and you know, it helps you sleep better at night because it's a buffer between you and high cost debt. The third thing, keep on keeping on with the retirement contributions. Don't worry about the ups and downs of the markets. The market's basically been jogging in place for 2 years. When you look back 5, 10, 15 years from now, you'll be glad you kept up those contributions. So don't try to outguess yourself. Just keep making those automatic contributions.
What about the person who says, Mr. McBride, I don't own, I can barely afford rent and insurance. It's just such a tough deal out for me there. Any lifeline you can throw those people, and those people are a lot of people in our service-oriented, service-driven economy, and hearts go out to that need. What can you say?
For sure. It is very difficult to cut expenses now. Yeah, I think that's sort of the knee-jerk advice people give is, oh, cut expenses. A lot of households that are in that position, they already did that 2 years ago. Right. Inflation's really stretched the budget. So you can't go too far cutting expenses, but you're still in a position where you can bring in some additional income. The labor market is very strong. Maybe it means doing some contract work or gig work, a side hustle, maybe even taking a second job just for a period of time to stabilize your finances, just for a period of time to pay down that credit card debt, to boost that savings, put yourself on more solid financial footing.
And at a tight labor market, you have, relatively speaking, better chances of doing that. So don't be shy about exploring that.
Yeah, absolutely. I mean, it's not like when we're in a recession and everybody's looking for work, well, then it's tough to find work. But we're in an environment now where we still have more open jobs than unemployed workers. You can exploit that, bring in some additional income, and use that to make some hay financially.
As somebody so deeply intertwined with studying all of this, what are the things that kind of keep you up thinking what's going on here? What are some fissures you see that are concerning you?
At the household level, I'm worried about car loan debt. Car prices,
not mortgage debt, auto loan.
No, exactly, car loans. And because we've seen car prices for both new and used go up very dramatically since the pandemic. And so, a lot of people have taken on $800 a month car payments. Well, with your credit card debt, if money gets tight, you can dial down and make the minimum payment for a while until you get your finances stabilized. There's flexibility. $800 a month car payment, there is no flexibility. It's $800 a month. And so I think right now, at a time when people are employed, they've got steady paychecks coming in, they're making the payments. But if the economy does take a turn south, if we do see a significant slowing, if we start to see unemployment rising meaningfully, many households are going to be, the kitchen table discussion is going to be, what do we do? Because we can't make that $800 a month payment.
We talk about residential real estate all the time. You think that's, at least at the moment, the affordability crisis notwithstanding, that's a huge issue that's going to have to be dealt with. Republican lawmakers have led efforts to say they are doing so. But we talk residential, but commercial real estate, both regionally and nationally. Any concerns or thoughts there?
That's the one thing that keeps me up at night, just because that's one, unlike the auto loans aren't big enough problem to have a systemic impact like we saw with, say, the mortgage problems back in 2006 that led into the financial crisis. But commercial real estate is big enough that it could cause broader economic issues if things go poorly. So that's the one that keeps me up at night.
Delinquencies on commercial real estate ventures?
Mostly the office space.
People aren't working in the offices as much anymore and don't need the space, is it?
They don't need the space. And for a lot of markets where they have an abundance of empty office space, it's difficult to convert that into residential. Right. You end up losing about 20% of your usable space. Well, that doesn't do much to keep costs down, even if you do convert it over. So it's the office space in particular, I think, that poses the biggest systemic risk, although I think we're maybe a little bit more insulated from that here, given so many financial firms moving into town.
Last question in our final minute. We saw banks, the inflation and interest rate cycle, and a lot of banks were exposed earlier in the year, and we saw some banks go under. Are banks solid? What do you say about my mid-sized bank? We know the big ones have to go under systemic risk test. How safe is the banking system?
Those issues that we saw earlier in the year, those were confined to those particular banks that made some bad decisions. They took a flying leap off the high dive without making sure there was water in the pool.
Right.
It was
as in reserves.
Exactly. It was not a systemic issue. We've got over 4,000 banks in the country. The vast majority of them are in fine shape. We will see more bank failures, but they will be predominantly smaller banks, and it'll be more pertaining to their local market as opposed to a broader systemic issue.
Final 20 seconds, final message to people at home.
Listen, it's tough going right now. I mean, more than half of households are living paycheck to paycheck, and that's with unemployment at some of the lowest levels in more than 50 years. So tough to cut expenses. Maybe your best bet, do what you can to bring in a little bit more income, even if it's just for a period of time, to stabilize finances, because that credit card debt, it's not going away. Those interest rates aren't coming down anytime soon.
Greg McBride, Chief Financial Analyst, Bankrate.com. As always, we thank you for your time and expertise.
Thank you, Michael. Appreciate it.
Thanks for being with us. Up next, The Roundtable with Brian Crowley.
Yeah.
Florida's governor, storm response, and separately weathering booze at a post-shooting vigil. Next.